Hey everybody, just a quick update on the stocks that are breaking out today. Today was an interesting day, and it's post-Christmas, so there's not a lot going on. They're trying to manufacture news about the economy and we're going to go into a recession like they've been saying for a year and a half, and technically we have been in a recession actually already. So it's no surprise that we're going to go into a recession. But I don't think, what the all the negativity around going into a recession is going to amount to anything because the Fed is pressured to lower rates, right? Because they've raised rates on themselves, threatening the banks, and maybe they want to drive the banks out of business, at least small regionals. And maybe what they want to do is lower the rates and into an election year. So the probabilities are in that on that side. They've also raised rates on themselves, so now the interest on the debt is so high that they have to lower them. Otherwise, when they refinance all this debt, it's going to cost way too much money. We're over $1 trillion in interest payments now, which is like the military budget or something. It's just there's no way we can ever pay back the debt. Anyway, I want to talk about a couple stocks that are breaking out today, and let's go through that list. I have a little list here that I'll just run down for you. Let's start with Amphastar. They make proprietary injectable inhalation and intranasal products. So they're a medical device company, and you can look at their earnings going from $1.37 in 2021 to this coming year 370. So it's practically a tripling of earnings. And you can look at this coming through a little cup with a handle there, and the stock is on a breakout here at $60. I don't love stocks that don't have huge volume, and this one has fairly light volume at what is it? I don't know. It's right now it's at, let's see what we got here. We got 647,000 for the week. It's not a lot of volume. That's only a couple 100,000 a day. I don't like stocks like this, but it is breaking out. I wanted to point it out to you. But stocks like Eaton, and Eaton makes electrical circuit breakers and things like that. Pretty important in construction. Look at how many weeks in a row Eaton has been up. This has been one, two, three, four, five, like 9, 10 weeks in a row. And the stock is right at a breakout point. Actually, it is past the breakout point, not too far past. And it looks like a cup and handle there as well at 230. And this is just a chugger. It's gone from in 2021 $6.62 at earnings to 9.95, and they're just continuing to chug along. By the way, a couple of disclaimers. This is not investment advice. This is research and entertainment. Also, shout out to MarketSmith for these great charts. I use their MarketSmith system from Investors Business Daily, and they're really good. And I use them because I'm a professional, and I use them, and I love them. It's a little overkill for a lot of people, but for me, it's great. So there's Eaton. All right, back to the charts here. Okta. This is one I used to look at a lot. They make secure connections between people and technology. That sounds so vague as a description, but the relative strength is 82. It's coming off a bounce through the 50 and the 200-day moving average. So it's bouncing up, coming off a loss this year, and they're projecting gains, big gains over the next couple of years, record gains actually. So that's one to take a look at. Again, low volume kind of a stock, but it's in the game, right? It's breaking out. WFRD, I believe, is the symbol. It used to be WFT when I used to trade this, called Waterford or Weatherford. Provides equipment, technology, and services for oil and gas. Yeah, this is the same company. It's gone from a loss of 414 and 689 in 21 and 20 to a gain of 86 cents last year to 517 in 2023 and 661. So something's going on in the oil industry, and these oil supply companies and specialty companies are showing record highs, and that's what's going on here with Weatherford. ASML, and I'm going to run through some good stocks here in a second, some more highly held stocks, but just wanted to point out there are some breakouts going on. This is right at a breakout right now. It is they got a return on equity of 56, which is great, and they got some fairly steady earnings projections coming up. So that's why this company is going up. They make integrated circuits, and if you know, the chip sector has been hot for the last year or so. And so ASML, let's see, do I have anything else here? TDW, I don't think I did that one. TDW, Tidewater. So they are offshore support vessels and marine support services in the offshore energy industry. So back to offshore energy a little bit. You could see there was a small cup. This is all a consolidation here anyway. But look at that beautiful bounce off the 40-week or the 200-day moving average. Just kind of trended along that, and then until finally it had 3 weeks in a row on pretty decent volume, just average volume, but not bad. Coming up through the top here, where it's now making a record high, and it's probably because it's gone from a loss in 2021 in earnings per share to projected next year a 587 gain in earnings per share. So that's what's going on. Let's look at some more popular stocks on Apple. Probably our most popular stock in the cash flow machine. Apple is right back to I think it's the 50-day moving average. No, it's not the 50-day, it's the breakout point. So Apple is right at a breakout point, which is 193 basically. So they're kind of hovering around that. I think it's on that watch news that there's a certain line of their watches that can't be imported because they violated somebody's patent, and that's being appealed now. But that's probably the fake news or the light news that's brought the stock back from almost 200. I suspect the stock wants to make a run at 200 and then, run up to about 220. That's what my charts have told me in the past. I don't have those charts on here, but that's how I've looked at Apple. Tesla, that's, if you follow me, that's my big one. Tesla is at a breakout point of 252.75, basically 253. It's just sitting right there, and it wants to go higher, and so it looks like it's making this little tiny consolidation here during Christmas week and holiday week, but it wants to run up to this 268.94, which is a minor swing point. It's not a major swing point. It's a low volume swing. So that's going to take that out pretty easily if it gets there, and it does it on any kind of volume, and they don't have any kind of news, and they got earnings coming up in a month. But once it takes that out, it's going to run to 278. Also a fairly low volume swing point. So those are minor swing points. And I think it's going to take them out easily if what I'm thinking is right, and that is that they're building cause. You can see this little trend line here. There's kind of this channel right in here. It's building cause to run up higher, and once it runs up through that level and that level, then the real test is this high for the last year of basically $300, 299. And like Apple, these stocks have a tendency to run up through these big numbers, these round numbers, the 300s, the 200s, these levels. For some reason, psychologically, the market likes to propel them higher. So they act as ceilings until there's enough volume to push through the ceiling, and then boom, they go. And when they go, if they go on decent volume, they really usually tend to run. It's the same thing kind of at a breakout point. These round numbers are certain. They're kind of psychological breakout points. So that's what I'm looking. It's got a little work to do. There's no question. It's got to run up from this breakout point to the 268, to the 278, to the 298, right, level. Once it gets through those levels, that 298 is a significant swing, and it hit that level on earnings and had some decent volume. So it's got a lot of work to do to get up through that. But once it gets there, and I think it's going to get there, Tesla probably will run from the 300s up higher. So we'll see. I'm not going to make a prediction of how high it's going to go. I have my own ideas. All right, so let's look at NVIDIA, and I'll just do a couple more here, and I'll let you go. But NVIDIA on a daily here is also right at a breakout point. Again, this is that $500 level, that round number level, that NVIDIA has just been coiling the spring here. You can see it. It's gone down to the 50-day moving average. It's hugged it a bit. It's bounced. It's tried to test that 500, didn't have the volume to hold it. It's coming back down the other side, but it's really coiling the spring. The longer a stock stays in a range, right? The longer it stays in a consolidation range, the more energy it builds up in that range, okay? So it coils the spring, coils the spring, coils the spring. The longer it goes, the higher it goes when it finally does break out. And I suspect NVIDIA is going to be one of those stocks that just coils, gets all these people on low volume into it. And then when it goes, everybody's like, oh my God, I don't want to miss it. And the stock runs, and it's going to go from 500. It's going to probably go a lot higher. And the chart, let me show you the chart on NVIDIA for the last 10 years or something like that. Look at this chart. The stock is at $492 today, basically, right? If you go back to 2004, this was at $1. You made 500 times your money if you invested since, for 20 years. Like, that's a lot of money. That's a lot of return. Now, I don't know anybody that's hung in there for that many years, right? It's really hard to do that. because you get greedy and want to take the money off the table. But every one of these highs, everybody probably said, oh, it's never going to keep going higher. And then it just kept breaking out, breaking out, breaking. It had a little correction here, just like it did here. And then again, it went back up higher. Look at this consolidation here. It's beautiful, actually. When you look at, if you studied enough stock charts, you see patterns. And when these things happen, like look at this one here, right? You see that little consolidation happened for 8 weeks. This is about 8 weeks going on here now. And when they happen, here's one. This one didn't work, right? And so it went down, but it tested it, came back up, and on high volume, it blew through that and then didn't work for a while. And it took about, what, a year and a half for it to get back up to that level. That's why you have to kind of be careful. And then bloom, it went up incredibly, right? From 4 to 40. So you've got to kind of take a look at that. All right, NVIDIA. I'll take a look at Google, because a lot of people are asking to look at Google. I think it's Google. All right, and I'm going to go back to a daily here on this one. And you can see, actually, let's go to a weekly here. Google is right at a breakout point right now. And so Google is building cause to go higher. It wants to make a run at this $151 level. Right now, it's at 142.82. So it's got a little bit of work to get there, but it's got to get above this area here, which is a minor swing point, which is about, well, it's kind of where it is right now. So it's got to run up. Let's see where the high is. 144.16 is the high, and it's low volume-ish. So 126 on the weekly. Right now we're sitting at 11 on the weekly, right? And last week it didn't hit the high. So it's got to make a lot more volume. I don't think it's going to do it this week, but it may next week. Next week it may do that 126 million here at that level, and then this level is not too much higher, right? But this is a high volume swing point, 281 million. So it's got a lot of work to do to get over that. But I think all these stocks are trying to go up into these highs. So we did Google, we did NVIDIA, we did Apple, we did Tesla. We did a bunch of other stocks that are breaking out for some fairly lighter volume stocks. Let's take a look at one more. I haven't looked at this one in a while. So let's take a look at Microsoft. Now, looking at Microsoft, it's breaking out, right? It's at that, look at that, it's breaking out, but it's also coiling the spring here near the breakout point. And so it's probably going to build a base on base pattern, which means that it runs up less than 20% here, and then it runs up into that area, and maybe it breaks out at another area. But right now, it's showing us that it didn't really want to break out at this spot, but it's not going down either, right? So it's got a relative strength rating of 87. You can see it's dropping a little bit, but it could want to go higher. All right, so you can see the earnings. This is a chugger. The earnings just keep going up from 9 to 981 to 11 to 13, and it's just chugging up higher, and they're accumulating things. This is a big company, right? It's worth what? $2.7 billion dollars, trillion dollars? Yeah, trillion dollars. And it wants to go up and join Apple as that $3 trillion company. So this is one of the ones that's up there now and just gaining value, as a lot of these tech stock companies are doing. Okay, listen, thanks for joining me here. I just wanted to kind of show you that there are still stocks breaking out, even though it's a holiday week. There are things happening in the market. We are at all-time highs. We are, in a period of time where the Fed has to capitulate. They have to lower rates. They're going to jawbone that they're not going to be lowering rates aggressively, but they're behind the scenes, they're printing money. And the printing money is basically the same thing as lowering rates in a lot of ways. And so if you look at rates, by the way, and I'll just take a look at the treasuries, you can see this is the worst performing asset. Like, it's a horrible asset, right? If you had been in treasuries, even if you got into treasuries in the beginning of March of 22, right? Or beginning of 2022, right? Just right in this period, it was at $150. And this is the safe money, treasuries supported by the government, right? Which I'm not sure that means that we're safe anymore, but anyway. So it's gone from 140 to, it went to 80. This is the safe money. If you had owned treasuries, you would have lost all this money. Now, you'd be making the income. You'd be making your 2, 3%, 4% in treasuries. And that's fine. And that's why a lot of people hold them. But I don't think they bargained for the fact that this thing had a 50% decline. And that's what happened. So you've got to be really careful about what you listen to on Wall Street, right? They're going to tell you this is the safe money while you're getting 2%, but you've lost 50 in a year or two, right? That doesn't sound like very safe money to me. And then if you put money into CDs and you get 5% now, that sounds great. but how much did your eggs go up this year? How much does it cost to buy a car now? How much does it cost to buy a house? What's your rent? All those things went up. So if you're locked in at 5%, but your things are going up about 15%, which is what I figure they are, I don't care what the government says, my rate of my things that are going up is way more than 3%. So is that really a good bargain? You're getting 5% in CDs, but you're losing, 10% extra in buying power. So you're not really getting ahead. You're losing buying power. We don't realize that as we get bamboozled by our governments and fake news and all the gaslighting that's going on these days. That's why you got to do your own research. That's why you can't give up your power in your wealth or your health or your time. All right. Speaking of time, thanks for your time today. I hope you have a fantastic day. Keep enjoying the holidays. We'll get back at it after the first of the year, but I thought maybe you'd want to take a look at